Wednesday, November 5th, market analysis, Stan Ehrlich. We start out with indexes, go to futures, and there are a few stocks that I am tracking as well. We had a little bit of a bounce today. It wasn't very much, of 2 to 3 points or so on the S&P, and it started to drop off sharply at the end of the day. I think this is our little bounce after most of the indexes have come down to the October highs and deserve a little bounce. After all, since we got our major sell signals on the S&P and the other indexes, most of them, either on the exact high day, like the E-mini, October 29th, and another bearish engulfing the next day, October 30th, we have seen lower levels, lower lows, and lower closes. Today is a very small, minor bounce. Here's the 5-minute chart. As you can see, early this morning, hit a low, bounced up, back to some resistance, the lows of the last several days in general, and started to break down late. That statement goes for basically the other indexes as well. The spider hit some support pretty accurately, almost closed an old gap back to here. I'll stretch this out, the marker, so you can see it came very close to closing the gap, but not quite. I still expected it to be closed. I told you gaps are almost always closed, and we're getting gap closures here in the last few days after it gapped up in the ballpark time frame of October 25, 27, 24, 27, 28, and 29. Those days contain some up gaps, but most of them are now closed or almost completely closed. And the 5-minute chart on the spider needs to get down to there to finish closing that gap. So half of it approximately is closed. Next, we still have a gap to close on the QQQ, and it hasn't closed any of it, and it's a little bit below today's lows. And we bounced today. There's also on the Qs only a little bit of a gap above the market. So we got one above and one below. I think the one above might possibly get closed first, and then we're going down, because in general, I think we're going down. I think we're going down lower than the lows we've seen so far, and probably going down to the ballpark level of the lows of October 10th or lower. Next chart, 5-minute data, QQQ. Next chart, new lows, NASDAQ futures NQ, slightly higher close, bounced off of support fairly well, but I don't think it's going up. Now, if I were a bull, then I'd say this is a test of support. We turned around, closed higher, looking for new highs. But we've got these upside exhaustion gaps, I'm calling them. Then we have overbought conditions, and we have a bearish engulfing on this chart, the NQ on the exact high day. You have seen, if you've been following me for any of the last 3 years or so, pick these turning points with these bullish or bearish engulfings occasionally that last multiple months, if not even years. That's fairly rare. But I'm not surprised if we see in a matter of weeks or a couple of months this market down below the lows of October 10th easily, and maybe even the lows in July and August. Next, NASDAQ futures coming down pretty good. YM, bearish engulfing on the exact high day. Another one a couple of days ago. Tested support yesterday, bounced a little bit today. I'm not turning bullish. I think this rally may have already ended today, and we're on our way down. Next, YM or MYM, same thing. Started to top out, little tiny double top over, I don't know, what is that, an hour maybe? And a test of resistance. I like what I see. Bearish. New low, but a higher close. Russell double topped out at a major resistance area. I talked about this the day it happened. Of course I did. And now we're kind of in a no man's land. I'm expecting it to come down to 2302. And we do have, for the first day today, a break of the lowest low between the two highs, which is a downside breakout of the double top, although it did not close below the lowest low between the two highs, which really is the breakout necessary. So I'm expecting that in a couple days. And here's the 5-minute chart on the Russell. And we're lastly looking at, okay, we're going to flip to bonds. We have an outside down day in bonds. It's almost oversold, but not quite. Normally, a bearish engulfing is bearish, and I do expect it to drop off more. I've been talking about 15.26 or a little under 16. I think it'll hit it tomorrow. That's fairly decent support. We will probably get into oversold territory and then have a bounce. We're also very close to a bull trend line of some significance. This bull trend line has 3 really good points on it and a few others that are super close. So a bearish engulfing is normally, excuse me, bearish plus the fact we broke support. But it does bother me that we did get slightly oversold today, and we're very close to a support line that could cause a bounce. So I don't know, maybe a little bounce here, but I am looking for this trend line to get broken ASAP, and I am looking for a minimum downside objective of approximately 110.11. Next, new low close, crude oil. Resistance stopped the rally. A possible bottom formation is falling apart. Looking for new lows, probably a test of 55.90. Resistance is stopping this rally in natural gas. I'm still bearish to about 2.27 because of a complex head and shoulder top that started forming November of last year and finally broke out of the pattern June of this year. Multiple shoulders, pattern inside a pattern that worked. Big pattern already half the way down a couple of weeks ago. Looking for lower lows. Heating oil. Overbought, new highs, but it closed lower on the day in overbought conditions. This could be a bear turn. I'm looking for a minimum dip back down to the trend line, but the overall trend is up. We now have higher highs since August, 3 months, good enough. And we're starting to see, although it's not very much time, higher lows as well. So we've got to hold the bull trend line and then got to make new highs after that. If this old flat bottom right triangle or a pennant, they're pretty, you can make a case for either one. About the same. They're both in the same family to be bullish enough to drive it up in a new high ground completely. Now, the long-term picture, the bearish engulfing at the top of the market on June 23rd didn't seem to produce a big bear move like I thought it might, but we did see lower lows for a bit, not much. So I'm not sure that that's in force anymore. That one just plain didn't work. I'll pull that down just a little bit. There we go. Didn't work. Now, gold, silver, platinum, copper. Looking for lower lows. Gold, I'm expecting to see it down to 35.95-ish. Silver, we sold on the high day exactly. October 17th, bearish engulfing ER sell signal. A little bit of a reverse bullish engulfing today. So maybe it'll bounce up a little bit more, around 48.90-ish, and then turn into new lows. That's kind of what I'm expecting. If there closes above 49, call it 50. Well, okay, call it 49.20. Then you might see a little bit more of a rally, but I think that area 48.90 to 49.20 is going to stop the rally, if it rallies. I don't trust it much. looking for lower levels. Platinum, lower low, slightly higher close, up against a very minor amount of resistance for the last couple of weeks, a bunch of lows. Don't see it going up much, expecting lower lows, looking for a test of support and or longer term bull trend line around 1468 and maybe even lower than that. Copper, lower low, but a higher close, but up against resistance. I think it'll flip back down to make lower lows, looking for a move down at least to 4.7. And I'm not going to rule out all the way down to 4.4 again. Overbought soybeans, slightly higher high, but I've squished in here a lot of historical data for you. This goes back to October of 21. That's 4 years of data here, daily data. Please notice that we've spent a whole year since August, a year and a third, since August of last year, going sideways with 5 significant lows within approximately about a 20-cent range. That's a very close range to have over a full year, 5 different bottoms. And now we've closed above all of the highs during that last year and a third. Major upside breakout. Looking for soybeans to come up to at least 1194. We'll call it 12 flat, and probably significantly higher than that. And I've been talking about that for at least a couple, 3, 4 weeks. Ever since we got the low of the break on October 1st with a green bullish engulfing, and there's another bullish green engulfing on August 11th, just before it started to go straight back up. Couple of 2 great buy signals. Next, bullish engulfing yesterday has caused soybean oil to go up a little but close lower. Today it went a little lower and then closed higher. We're still hovering around this bear trend line. I need to get it to close above yesterday's high, and hopefully a very strong up day that'll close well into the 50+ area. That would be good. Yeah, 50-50 or higher. Maybe tomorrow. Got the bottom so far. Monday. Meal. Overbought extremely the last few days. Really can't tell you that it's topping out, although I'm extremely suspicious, despite the fact that it's a good, strong up day, despite the fact that it's closing extremely close to the highest high 2 days ago, and despite the fact that there's no visual sign that the market's actually topping. But we are in a resistance area. A lot of people don't know that. We're extremely overbought a couple of days ago. A lot of people don't know that. And when I mean extremely, I mean I'm screaming bloody murder that I think this is topping out. Probably a move down to about 295 and then up and away. I'm long-term bullish on grain. Corn. We had a bearish engulfing a couple of days ago. I said at the time on that day that I didn't think it was going to work, mostly because I've got the head and shoulder bottom, although it's lopsided, the timing is off. And you got a double shoulder on the right, but a single on the left, so the symmetry isn't quite there either from a timing standpoint or other aspects. So we got a new high close today, almost killing the bearish engulfing that I said I didn't think it was going to work. And I'm bullish to the tune of minimum 470, period. Wheat. New high close, and now finally getting up to a little bit of resistance. And the 83 overbought is quite high. It's about to turn back down again, probably only to about 536, and then up and away again. Bullish, grain, wheat included. Next, Apple. Sideways today, steady close, outside trading range. Now, I can't make much of it. Looking for a dip down to close this little gap, but that's too close, 264. I think that's going to get closed easily, and we're going to go down probably to 253, and I'm actually looking for more than that. probably in the ballpark below 245. Next, a little rally on Tesla, 20 bucks. Third highest close for the trend. Outside up day. Possible double top, though. I'm still looking at this as a possible top formation. I think there's more bearishness here than there is bullishness for one day with an outside up day. Downside move starts at 411, then we're going to go down to 353. Double top formation may be developing. We're only 2 days after the highest high here, so we need to break out to the downside at 411 in order to get the next big wave down. New low close NVIDIA. There's a gap above the market to close from a couple of days ago, Monday's low to Tuesday's high. And there's a gap below the market to close at 187. Frankly, I think it's going to go down to 187 first, hit some support, maybe a little bit lower, and then go up and close the gap above the market. Gaps are almost always closed, and we've seen some gaps get closed already just in the last week or so in indexes and some individual symbols. Next, bullish engulfing today in AMD, but again, this gap is almost started to get closed at today's lows. I think it's still going to get closed, and I'm really looking for this big gap at 170, down to 170 to get closed. That's a big break from a 255 price. You guys have a great day and profitable trading to you.